I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Here's a check of your first word news. The White House says there will be no summit meeting between the U.S. and North Korea without concrete actions that match the promises made by Pyongyang. White House Press Secretary Sarah Sanders also says Washington made zero concessions in agreeing to the meeting. Governor Rick Scott has signed a school safety bill passed by the Florida legislature in response to the Parkland school shooting. It raises the minimum age to buy rifles from 18 to 21, extends a 3-day waiting period for handgun purchases to include long guns, and bans devices that allow guns to mimic fully automatic fire. President Trump's legal team wants a deal with special counsel Robert Mueller. That's according to the Wall Street Journal, citing a person familiar with the discussions. They reportedly would involve an interview with the president to be used as leverage to expedite a conclusion to the Russia investigation. Former Trump campaign aide Sam Nunberg arrived at a federal court just days after he mocked the possibility of testifying before a grand jury in a series of television interviews. He now says he produced emails and other communications requested by Mueller and calls the whole affair a teachable moment. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti, and this is Bloomberg.
I'm Caroline Hyde in London, in for Emily Chang. This is Bloomberg Technology. Coming up, Uber makes its pitch, but did Wall Street buy in? Why the world's most valuable startup is hitting debt investors up for $1.25 billion. Plus, Bitcoin caps its brutal week with a 20% plunge in shares. Well, it will track the dive and take stock at the world's most valuable cryptocurrency. And Kicking the Habit will speak to the founder of Hold. It's a startup that wants to help users dial down their smartphone addictions. First to our lead. Well, the Nasdaq rallied to a fresh record Friday, capping an 11% gain since its February 8th low. That's as investors poured back into the market's biggest stocks. Now it's a return to form for the tech titans, from Apple to Amazon, which briefly lost their luster as the market convulsed last month. It wraps up a wild week for the markets, driven by headlines on tariffs, the departure of the White House advisor Gary Cohn, and the surprise announcement of a possible summit with President Trump and North Korea's Kim Jong-un. For more, let's go out to Romain Bostic. He's editor of Bloomberg's Top Live blog. Romain, talk us through it. What was it that really drew out the buyers today? Well,
there's a little bit of confidence and a little bit of risk appetite returning to this market. Here we are on the 9th anniversary of the start of this global bull market. It looked like it was running out of steam. Yesterday, we got a little bit of encouraging news on North Korea. We got a little bit of encouraging news that the tariffs weren't going to be as bad as people thought they were going to be. And then this morning, we came in here and we got a jobs number that seemed to suggest that this Goldilocks economy we've been in is going to sustain itself for a little bit longer. Like you said, all of the major indexes rallying today. The Dow was up significantly today. The Nasdaq hitting a record high. Even the S&P rising much higher today. I want to take a look at one of the charts that sort of illustrates what was going on here today. We saw a big move higher not only today for the major indexes, but take a look at what happened for the week as a whole. Nasdaq Composite up 4.2%, Dow up 3.3%, and the S&P logging a 3.5% gain. We even saw a continued rotation back into the small cap growth space. Russell 2000 up more than 4% this week. Now, it's important to think about where we were on February 1st. That was the day before that market correction really happened. Then you look at the drop we took down to February 8th. S&P has basically recouped most of those losses, only about 35 points below where it was when that correction started.
I see your chart. I raise you one here in Europe because it's been fascinating also, some of the really big tech stocks really coming back in vogue. And it's interesting, there's not just buyers in the US, there's also money pouring into those sorts of stocks here from Europe, into some of the ETFs that are exposed to it. I'm going to dig into my terminal. If you have one at home, type in #BTV6330. There you get it. Keeping the faith. Europe's listed tech fund just got 1 day of outflows this year. Just one single day. Other than that, BlackRock's iShares S&P 500 information technology sector, ETF. Get this, $500 million added so far this year. Romain, is it really been a draw back into the Amazons, into the Apples during this slight push higher on the back of this economic news? It
really has. I mean, tech has really shown a lot of leadership in this sort of rebound that we've seen since that February 8th low. In fact, I have another chart that I'm going to show you and to sort of one-up yours, hopefully. It's #BTV 5254 on your terminal. And if you look at that white line, that's the NASDAQ 100. You look at how that all, and the other lines basically show the S&P, Dow Industrials, Dow Transports. Look at how they all pretty much dropped in tandem down to February 8th. But look at the rise back up. You see that white line really separating from the pack, and that shows you that investors are really pouring back into the tech names. You talked about the IUIT ETF in Europe. You're seeing it in some of the other ETFs here in the United States. It's all about these big cap tech names, Amazon, Apple, Micron, a lot of the chip makers. This is where people are seeing confidence in this market. This is where people are putting their money. And this is where I think we could potentially see a little bit more run of this bull market as we head into Monday and into the next week.
Fascinating stuff. We thank you very much indeed. Bloomberg's Romain Bostick, wishing you a great weekend.
Thank you.
Now, perhaps it's becoming a familiar pitch to debt investors. A high-flying tech company with a charismatic leader but no real cash flow asks them to lend it money. On Friday, it was Uber who made this move. The company is seeking a $1.25 billion loan, and the ride-hailing company's new CEO, Dara Khosrowshahi, attended the meeting in New York among senior management, telling investors, well, why this is a good deal despite ongoing losses for the company. For more, let's bring in Bloomberg's Sally Bakewell, who covers corporate finance in New York. And I'm pleased to say Bloomberg Gadfly's Alex Webb, who joins us in London as our guest host for the hour. Sally, I want to kick it off with you because you've been covering this, and fascinating way in which Uber is going to the market. They're bypassing the banks.
Yes, that's right. And that's actually only one of the reasons that it's been a very unique deal. So rather than what is typical in the leverage loan market, where a company goes via a bank to investors, in this case, it's gone directly to them and asked them to pony up this $1.25 billion loan. But that's not the only way it's unique. Usually, leverage loan investors make their decisions based on certain financial metrics. And one of those key ones is a measure of debt related to earnings. Now, if you look at Uber, one of its measures of earnings was actually negative last year. It was negative $2.2 billion. So investors don't really have those metrics that they usually live or die by. And so they have to base their decision on slightly different things. The charisma of the CEO and the whole dream and reality of Uber, which is a little bit different, in a similar way perhaps that we've seen with Tesla and Netflix.
I want to really talk to Alex now about this theme that we're seeing. We were talking about it offline. I think it's fascinating. Uber goes to the debt market without the help of banks. Sure, they've got Morgan Stanley as an advisor, but they haven't got book runners. We are seeing a similar theme with Spotify going to the equity market, bypassing banks. It's becoming a theme, or is this just one-offs?
Well, they perhaps are doing it for different reasons, but nonetheless, it does seem to be a theme. I think maybe these tech companies are asking themselves the question, do we need the banks? And some people have mooted that perhaps if the Spotify process proves to be a success, then that might be a route that someone like Uber goes down if they do decide to IPO themselves over the next 18 months, 2 years or so.
And what about some of the things that Dara Khosrowshahi was saying at this particular event? Because I know you were digging into particular to the things that he didn't say. Well,
I thought there's this lovely line in Sally's story where she writes that Khosrowshahi said that Uber was improving its governance ahead of the IPO plan for the second half of next year. But at the same time, he's not giving these details which Sally so well outlined. And perhaps I'd be intrigued to hear from her if she had any feedback from some of her contacts on how that sort of line was received in the room.
I think,
Sally.
Yeah, I think there was a certain lightness around some of the financial details on one of the calls, but the company did go into more financial details on another of the call, where presumably investors could get a little more on which to make their decision. But a lot of the investors are saying that because of the nature of the leverage loan market at the moment, it's wide open. Borrowers have a real opportunity here. And that's perhaps why Uber is able to do it this way right now.
And talk to us, therefore, about the pricing they're having to pay up, because they have tapped the loan market once before. That time they went more the regular way of a syndicated loan. this time they may be having to pay up a little bit more as a spread over the benchmark.
Yeah, that's right. They're paying a little bit more than the average borrower of one of these kind of risky loans at the moment. And that really can be expected. And that's the sort of premium it probably has to pay based on these more elusive financial metrics that it's putting towards its investors. But the general consensus, I think, is that this deal will get done.
Alex, talking about the elusive financial numbers, I mean, we do have a few stats. The fact that they got overall, what is it, a loss of $4.5 billion in the previous year. They've really been looking at a debt level of $3.5 billion. They might be able to tackle this by the fact that they might be calling it quits on Southeast Asia. Talk to us about the deal that we might be seeing with Grab.
So this is really interesting. Yes, it was reported earlier by colleagues in the US. Wall Street Journal had a follow-up story today saying that Uber is divesting, is close to an agreement to divest its Southeast Asian assets, and Grab, which is a competitor there, is taking it on, and Uber will therefore get a stake in Grab. What is particularly interesting here is one of the biggest shareholders in both companies, Grab and Uber, is of course SoftBank. And there has been some questions in the past about whether SoftBank gets its portfolio companies to talk to one another, to collaborate. One does have to wonder whether there is a certain amount of pressure going towards them now and trying to find a solution which suits all parties.
Grab, Didi, Ola, Uber, it's got its fingers in many of those car pies.
Indeed. And one that's really interesting is I think that a lot of people are expecting that companies will own particular regions and not be global in every sense, and this points in that direction.
Fantastic stuff. It's been great. Of course, Bloomberg's Gadfly, Alex Webb, going to be sticking with us for the hour. And my great thanks to Bloomberg's Sally Bakewell in New York. It's a Brit takeover at the moment here on Bloomberg Technology. Now, coming up, Bitcoin continues its rocky streak. Will the cryptocurrency be able to bounce back? And if so, when? We'll discuss next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the US on SiriusXM. This is Bloomberg. In the latest revolving door, Qualcomm said Paul Jacobs will no longer serve as executive chairman to the board, downgrading the role of its previous CEO and the man who's been central to its fight to stave off a hostile takeover bid by Broadcom. Now, Jacobs will remain on the board, though. The company will appoint Jeff Henderson as independent chairman. Henderson has been on the Qualcomm board since 2016. Now, a story we continue to watch. Bitcoin's rough week headed for a bitter ending. Bitcoin has slumped more than 20% amid increased regulatory scrutiny in the US and Japan. News of an attempted theft at one of the biggest trading venues, and also that bankruptcy trustee of Mt. Gox has started selling the now defunct exchange's holdings of Bitcoin to repay creditors. That just added to the selling pressure. Joining us in New York to discuss more is Bloomberg's Lily Katz, who covers cryptos for us. And it was a whirlwind of depressing news, perhaps, for the Bitcoin price. What do you think is the real takeaway here, particularly in the regulatory issues? Because perhaps more regulation could mean more institutional buyers in the long term, Lily.
Yeah, I think that's definitely true. I mean, I think when some investors hear the word regulation, they're worried, regulators are going to somehow shut down Bitcoin altogether. We'll see headlines that'll say the SEC is cracking down on crypto, which isn't wrong, but something a well-known crypto lawyer once said kind of stuck with me, which was maybe we should frame it more like the SEC is cracking down on fraud, because that is their job. Their job is to crack down on these scams to protect investors. And also, like you said, when there is more regulation, institutional money is more likely to get into the space, because you have these hedge funds, these high net worth individuals, these financial firms who need to comply with regulations. They have to be careful about anti-money laundering, know your customer rules. So when there is more regulation, these types of firms are actually more likely to come into the space and sort of dip their toes in the water.
And you were just talking about it there, some of the phishing scams. I mean, these phishing scams go from your retail investors who are getting hit up on social media via Twitter and Facebook, but you're also seeing phishing scams affecting some of the biggest so-called exchanges. How do investors protect themselves against this sort of thing?
Yeah, in the last month or so especially, we've seen a lot of these phishing attacks where fraudsters will pose as exchanges and actually say, we're giving away free crypto, give us your details. And so you're seeing a lot of the actual exchanges warn their customers about this type of thing. I mean, you can do a lot of things to protect yourself. I think one of them is you can use exchanges that actually have customer support. Some of these exchanges don't even have customer support phone numbers. So you should think about that before you give, your big chunks of your money to them. I mean, I think also another thing is exchanges with, transparent and respected management teams. Again, a lot of exchanges don't even have, they're not even transparent about who the CEO is, who's on the board. So that's another thing to think about. Also, secure your phone. Use two-factor authentication. If you don't know what it is, Google it. Be careful about using public Wi-Fi. Be careful about clicking on links, especially in emails. There's a lot more you can do, but those are just a couple of the things.
Do your due diligence, always a good one. I mean, Lily, it's fascinating in terms of Bitcoin. We all talk about it because, of course, it's the biggest by value in terms of the crypto assets. I'm going to dive into my Bloomberg now, and if you type in #BTV 5029, you can see that actually, because it's one of the biggest players, because there are also these futures contracts out on there, we're seeing shorts really build up. We've got 3,824 contracts out in terms of pressuring this down, the short selling, the view that institutional players are taking that Bitcoin could fall yet further. They're double the amount of contracts, long contracts, that we see out there in terms of futures. What about other crypto assets here? Because we know that potentially hedge funds think Bitcoin could fall further. Are we seeing the sell-off similarly in some of the other cryptos like Ripple, like Litecoin, Ether?
Yeah, we are actually. The crypto market tends to move as a whole a lot of the time, and I think that's because investors still have a hard time separating all these different coins from one another, which is understandable because it's still a pretty nascent market. But the whole crypto market, if you look at like a list of all the different coins and what they've done in the last 7 days, it's just kind of like a wall of red. And I think now the whole market is worth around 360 billion, which is about 100 billion less than it was worth 7 days ago. So yeah, they tend to move all together.
Yeah, they might not work in tandem with the market, but they sure as do work in tandem with each other. Bloomberg's Lily Katz, great to have you on. Thank you for breaking it all down for us so simply. Now, coming up, the tech fest that is South by Southwest is underway, and it's not just a showcase for the hottest new gadgets and companies. We look at a more somber South by. This is Bloomberg. Now, as Twitter attempts to combat trolls and harassment, CEO Jack Dorsey said that the company is working on making verification an option for everybody. Now, the comments come during a Periscope live stream on Thursday. Twitter's head of product, David Gasker, clarified that it's rethinking and reworking its verification process. In the past, Twitter has faced criticism about the little blue check on people's accounts, from protecting anonymous accounts to verifying white supremacists. Now, speaking of Twitter, the event that put them on the tech map, the annual South by Southwest Festival kicks off in full on Friday. But this year's technology portion of the event looks to be on more than the usual frenzied search for the hottest new startup. The focus this year promises to be more somber, and it's the focus on intersection between society, politics and technology, with panels scrutinising social networks' responsibility to police content on their sites, and a deep dive into cybersecurity and a spotlight on the Me Too movement. To tell us more, Bloomberg Gadfly columnist Alex Webb, who is here with us for the hour. And you've just come back from living in San Francisco. You know what South by Southwest really stands for, and how is it placing itself this year? Because interestingly, it's not always had the best track record when it comes to gender, to diversity. How does it see its role among the conferences?
It seems that really at the start of the year you get CES, which is the big hardware conference, any number of widgets basically. Sometimes lets you anticipate what's going to be in the next round of consumer products, but it's really focused on hardware. Then towards the summer and the autumn, you get the Sun Valley conference, Allen & Co, and that really is the big wigs, you know, slicing and dicing big deals, multi-billion-dollar deals. In the middle there somewhere, now moving into the spring, you have South by. And South by is sort of the more ephemeral cousin of these two. They talk about ideas, and there are some software things that are pushed, but it's really higher level discussions.
We're just having some interesting breaking tech news. We've got to be doing it. Intel is said to be considering a possible bid for Broadcom. We're going to be going back to South by Southwest in a moment. We've got to dig into these particular headlines. It seems to be reported by that Wall Street Journal. Intel is said to consider a possible bid for Broadcom. Remember, these swirling deals for these chip makers. We've got Qualcomm being eyed up by Broadcom. Now it seems Intel is eyeing up Broadcom itself. It looks as though the M&A is not going to be finishing. Broadcom gaining, we see 5% on the report of Intel weighing that offer, so clearly increasing on the futures market. So look out for Broadcom on the market open on Monday. We'll have more later in the show. Let's get back to Alex now, though, on South by Southwest. You were saying there what South by Southwest stands for in this in-between Sun Valley, in-between CES. What about where we see the great and the good gather? We've got Eddie Q, a man I know you know very well, having reported on Apple. We've got Bosma St. John, or Badass Boz, as she knows herself, on Instagram. She's, of course, the head of brand for Uber. We've got even the London Mayor going over to South by Southwest, really trying to pitch the wares of London as a tech destination. But this year, they are doing the mea culpa in a big way. They are realising the responsibility of technology, what Facebook needs to prove in terms of taking down terrorist content, what Uber needs to prove in terms of culture and ethics. How do they do that?
Well, I think in previous years there's been a lot of talk about ethics, but it's been largely theoretical. What if, maybe, could. Now it seems that this stuff actually has some real substance. They can see that things they do have an impact on the real world. In Silicon Valley, you often talk about move fast and break things. Well, one does wonder whether they moved a bit too fast and broke the democratic process, perhaps. And so there's a real engagement to see what they need to fix and how they can do it.
OK, it's fascinating to delve into this. We'll see, 50 panels in excess of discussing gender and diversity. It'll be a fascinating conference to be at. And that was Alex Webb from Bloomberg Gadfly breaking it all down for us. And he's not going anywhere. He's here with us for the hour. Now, of course, you've got to be tuning in for all our South by Southwest coverage next week, including our interview with the London Mayor, Sadiq Khan. But, of course, we've got to get back to that breaking news that we just brought you. Intel said to be considering a possible bid for Broadcom. That is being reported by the Wall Street Journal. We can already see the market reaction here. We're seeing an after-hours trade. We're seeing Broadcom gaining some 5%, as you'll see. Are now currently up 5.5%, 14 points. Meanwhile, Intel currently down by 0.3%. We'll bring you more on that story next. This is Bloomberg.
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Here's a check of your first word news. The White House says no meeting will take place between the U.S. and North Korea without concrete actions that match the promises made by Pyongyang. Meantime, the United Nations welcomed the news with an offer of assistance.
The Secretary General is encouraged by the announcement of an agreement between the United States and the Democratic People's Republic of Korea to hold a summit meeting by May. He commends the leadership and vision of all concerned and reiterates his support for all efforts towards the peaceful denuclearization of the Korean Peninsula in accordance with relevant Security Council resolutions.
Relief workers trying to take advantage of a lull in fighting across the Syrian countryside of Ghouta were reportedly attacked while delivering aid. Video footage released today appears to show an airstrike near the rebel-held city while supplies were being unloaded. An estimated 400,000 people are said to be trapped in the Damascus area suburb. More than 900 people have been killed since the Russian-backed government assault was launched last month. British investigators are retracing the movements of a former Russian spy and his daughter as they try to discover how they were poisoned with a nerve agent. Police have cordoned off sites, including Sergei Skripal's house, a car, and the cemetery where his wife is buried. Skripal and his daughter, Yulia, both in critical condition, were found unconscious on a bench in the UK on Sunday. Australian Prime Minister Malcolm Turnbull today praised Thursday's signing of a sweeping free trade agreement between 11 Pacific Rim countries after the U.S. withdrew from the accord.
This will provide substantial additional access for Australian exports in all the other countries of the TPP, 11 nations, including our own. And the fact is, because the deal is now signed, it is something to which the US could return at some point in the future and to which other countries can join. The UK has already expressed interest post-Brexit.
The human rights chief at the United Nations today suggested that Philippine President Rodrigo Duterte should, quote, consider some sort of psychiatric evaluation. He's demanding the Human Rights Council, which counts the Philippines among its 47 members, take strong action after Duterte's recent criticisms of top human rights defenders. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg, and more of Bloomberg Technology is straight ahead.
This is Bloomberg Technology. I'm Caroline Hyde, in for Emily Chang. Now, more on that breaking tech news. It's being reported by the Wall Street Journal that Intel is said to be considering a possible bid for Broadcom. Let's go to Anand Srinivasan from Bloomberg Intelligence and Alex Webb, still with us from Bloomberg Gadfly. Anand, talk to me about this. It is a huge deal. $100 billion in excess of is the market cap of Broadcom. We're seeing the reaction in after-hours trade, GIPA on your Bloomberg terminal. It's up almost 5% on this news.
Look, I mean, if you want to assemble the pieces together, Intel is very, very strong in the data center, is very, very strong in the PCs, very weak in mobile. So in a lot of ways, this would give it mobile exposure. Is non-existent in wired communications on a relative basis compared to Broadcom. So Broadcom, this is obviously its strength. So if you wanted to assemble pieces of the pie and make a holistic conglomerate of logic chips across different sectors or subsectors, wired communications, wireless communications, data center computing, and PCs, this would be the logical combination. Now, there are obviously regulatory pitfalls, and obviously this would be an enormously complex deal to get through the markets. There'd be a sizable amount of debt and equity components involved here. But the pieces of the puzzle seem logical to assemble. Whether there's appetite in the market for this sort of it from Intel shareholders, that remains to be seen.
Alex, remind us of the merry-go-round that is going on, because each chip company is trying to buy each other chip company.
It's a very complex game of musical chairs. So we start at the lowest end, and you've got NXP in the Netherlands, which is being acquired by Qualcomm. Qualcomm, of course, is then in the process of in a sort of takeover battle with Broadcom. Then further up the chain now we have Intel as well. The thing that's quite interesting is Broadcom getting involved with Qualcomm muddied the waters a little bit for the NXP deal, added some complexity. Is that deal going to be completed? It seems it is. One does then wonder whether Intel has a similar ambition, whether it getting involved with Broadcom makes it more difficult for Broadcom to acquire Qualcomm, and Qualcomm is, of course, its big rival in the US. So there's a lot of upside here for Intel strategically.
Fascinating in terms of whether or not it can afford it. And I just want to get your perspective on the cash that they've got to play with here. You talked about regulatory concerns, but Intel has a large cash pile here. I mean, it doesn't have much debt, and it's worth significantly more than Broadcom.
Absolutely. So the question is, look, you have to think about this outside of the financial structure. One of the pieces of the logic behind the conglomerate is do you want to assemble all these different pieces of the puzzle together? Do you, in fact, want to have a very, very large plate, a complete plate across different industry verticals to play with? Do you want to be the chip maker for most everything? Intel's a $243 billion company from a market cap perspective. Broadcom is only 100 or so billion, acquiring a smaller company in Qualcomm, which is a little bit on the ropes, if you may. So the question is, what does Intel want to do in terms of assembling its large conglomerate? What does it want to be? Does it want to be a data center strong company? Does it want to have exposure to PCs? Does it want to have exposure to this weakening handset market? Or does it want to have exposure across all of these subsectors?
Let's get even more expertise. Getting all the heads together. We've got Brooke Sutherland, Bloomberg Gadfly, also joining us now. And Brooke, give us your take, because this could be an enormous deal. We're already seeing the shares of Broadcom move in the after-hours trade. I mean, is it realistic?
Sure. I think the funny thing about this deal situation is I don't know if I've ever seen more three-dimensional chess going on here. You had the NXP Qualcomm battle. You're now having Broadcom, Qualcomm. Maybe Intel's now entering the fray. I mean, it's just fascinating to watch. But sure, I think it's realistic. I think it's totally normal for Intel to be taking a look at this. I mean, you have a combination of two of the biggest players in this industry, which would pose a significant competitive threat to Intel. And I think it's totally natural for the company to want to get involved maybe and take a look at what's happening here and see if there is a role that it could play, whether that's breaking up the Broadcom-Qualcomm deal or potentially being a buyer itself.
I think picking up one of the things Arnand said just now is pretty interesting. You look at some of the best performing chip stocks right now, and it is the likes of AMD and NVIDIA, which are very focused on particular segments of the market. And so therefore, yeah, it's a very valid question to ask, to what extent then do investors have an appetite to go for, yeah, as you say, a conglomerate rather than these far more focused stocks? You
know, the one point I do want to make on this issue is that Hock Tan, which is who runs Avago, has assembled this conglomerate, has brought several companies, divested very non-core segments very, very quickly and cut costs dramatically, has a very, very different SG&A profile relative to Qualcomm or Intel or any of the other companies in the semiconductor landscape. So this has been part of the MO of Broadcom for a while now. Intel's not historically been super successful at large acquisitions, both in terms of price, in terms of integration, in terms of effectiveness. So it remains to be seen whether Intel can successfully pull this off. I think that will be telling from an investor reaction perspective.
Brooke, what about regulation here? I mean, are you anticipating that regulators could think that this deal and this chip maker would just be too vast?
Sure. I mean, I think you have to look at the possibility that they'll take a look at that. What's been interesting is, you know, in the U.S., typically regulators only focused on areas of specific direct overlap. Increasingly, they've been looking more at vertical integration. We saw that with the AT&T Time Warner deal. There's some questions about what the pushback will be with something like CVS Aetna, or recently this week we just saw Cigna Express Scripts. So companies are still trying these deals, but regulators are taking a closer look at it and maybe looking at maybe mimicking the European model, where they take a broader view of the market and how much control of the supply chain companies will have.
One name actually we haven't mentioned directly, of course, is Apple. And Apple, weirdly, has actually been supporting, it seems, there's a sense it might be supporting the Broadcom bid for Qualcomm, for the reason that Broadcom tends to reduce the investment in R&D. And by doing that, it means that the strength of the chips going into their competitors' smartphones is therefore not as good. And Apple's able to develop more in-house, which gives them an edge. One wonders with Intel, they've been trying to position Intel as a supplier in order to put pressure on Qualcomm. One does have to wonder here what Apple's sense of it is. Where would it prefer that the chips fall out at the end of the day?
I think Apple would prefer a fragmented market across the board for all of its suppliers, so that it can pit one supplier against the other to get best prices, and not have any strategic alignment for a key component with any given supplier, be it Qualcomm, be it Broadcom, or be it Intel.
Brooke, therefore, as we see the merry-go-round continue, how will we start to hear investors vote on this particular element? We've seen today actually a movement in the board of Broadcom and Qualcomm, and you know, whether or not whether we want to see voices that will allow these deals start to go through. What might we hear from the investor base come Monday if we are going to see a realistic bid coming from Intel?
Sure. I mean, I think you're going to see Intel shareholders sort of vote with their shares, and we'll look at what happens to Intel shares on Monday and after hours trading today. I think in the case of Qualcomm, the board shakeup that we saw today is not so much a shakeup as it is a reshuffling of members and what their roles are. So I'm very skeptical that's going to be enough to swing Qualcomm shareholders who are already very critical of management, who are looking for some sort of change, whether or not this deal with Broadcom goes through.
Fantastic. What a lineup. Great to get all of your opinions, of course, just as we were breaking this news down for you. Bloomberg Gadfly, Brooke Sutherland, and Anand Srinivasan has been joining us from Bloomberg Intelligence. And, of course, Alex Webb going to be sticking around with us. We'll be breaking you down all that news from the Wall Street Journal report on a potential bid for Broadcom coming from Intel. Now, are you glued to your screen? Can't wait for the next notification on your smartphone? We talk to a man who's trying to cure your device addiction with an app, ironically. Next, this is Bloomberg. So, someone just liked your photo. Have you seen that latest tweet? It's the constant rush to check your mobile device as soon as that notification badge pops. Sure, it leads to instant gratification, but some studies tie smartphone addiction to depression. And with 50% of teens and 27% of parents saying, well, they feel addicted to their mobile devices, there is a constant quest to find ways to break that hold. Well, a company that's trying to wean users off their phones is a company called Hold. And ironically, it's an app to cure app addiction. It rewards users with perks like free cinema tickets for not using their phones. So, just how does it work? To answer that, I'm very pleased to welcome the founder of Hold, Vinod Vinaya, and still with me, Bloomberg Gadfly economist Alex Webb, who's recently been talking about this very issue of phone addiction and how to break it. Vinod, talk to us about Hold. How big is it? How are you scaling? And is it working?
Thank you. Yes, so Hold, which is an app that rewards students for not using their smartphone when they're studying and rewarding them with commercial prizes from partner brands. We started this 2 years ago when we were students. We were sitting in class and we were constantly distracted, right? And always checking our phones. So we wanted to create a solution that played and, you know, also fulfilled the need of instant gratification that we had, that we get from Facebook, Snapchat and Instagram. And we launched it in Norway and got, after 18 months, we got 40% of all students in the higher education.
And so you've come from Norway, you've come over to London instead, and now you've got money, funding from the likes of Founders Fund, for example. How much is it? 800?
So in total, we raised 800,000.
And how will this scale the business in the UK? How are you seeing downloads already? And are you seeing students actually switching off more and more? Are they becoming addicted to becoming less addicted?
Well, if they do that, that's good, right? Because then they're eventually using their smartphones more consciously. So with this investment, we really want to focus on the UK market, as this is the kind of the next milestone for our company. We launched it last week, and we've been seeing that it's widely adopted across the UK. We opened it up for 170 universities, and the feedback has been really good. What's also really interesting is to see how the student communities have been, you know, spreading the word about Hold, and the word of mouth effect is really, yeah, we're really grateful for that.
So as far as I understand it, there are sort of 20-minute increments, and for every 20 minutes you get a voucher perhaps for a cinema ticket or a cheaper cinema ticket or something. Now, clearly you guys are not a charity. How do you make your money from this?
So the business model is quite simple. For brands, Hold is an alternative channel for marketing. Instead of pushing their marketing message on other platforms where the marketing message is kind of a source of distraction, you know, when you're watching YouTube, for example, that you get interrupted. Through Hold, the brands could actually increase the, you know, end users' quality and like the well-being, and they pay a subscription fee, a monthly subscription fee, and yeah, that's
particularly interesting because, of course, there's been a certain amount of discussion in the US when you look at Facebook and Google, who are really about user engagement. Yep. And, of course, their user engagement allows them to push the brands towards potential customers. Exactly. And, of course, you seem to be doing the inverse. Is there then a risk that someone like Facebook or Google, Facebook, which famously does look at other brands and see what they've done in order to expand itself, steals your ideas?
Well, I mean, there's always a risk of that, and we think that what we've been seeing is that it's a lot of companies evolving in this space with like mindfulness apps, promoting conscious phone use, And we really like to see also, the bigger tech companies taking responsibility, but also the brands, because at the end of the day, the brands are fueling this arms race for your attention, which we want to change a little bit.
And how are you finding it's actually working? You sort of hit a very sweet spot. You set up the company a couple of years ago, but already you're seeing really at this very tipping point, the man who invented the like button himself saying he no longer has the Facebook app on his phone because he doesn't like the addictive nature. Will we see new companies forming that stop playing upon their addictive nature and the desire for us all to keep on checking our devices?
Yeah, I think that's, it's always when you introduce a new technology or a new product, most often people get out of hand, and how to use it, how to really interact with it. And I think it's like a learning process. I mean, the smartphone was introduced 10 years ago, and it wasn't really any entities guiding people on how to use it properly. And we think that it's going to be a lot of companies evolving in this space, and we want to take part of that.
Well, we'll see how you grow here in the UK, already scaling in Norway. Been great to get Vinod Vinaya, CEO of Hold. Great to have him joining this evening. And, of course, Bloomberg's Alex Webb, Gadfly reporter. Fabulous to have you with us throughout the show. Now, coming up, it's been nearly 1 year since digital management knowledge company Yext went public. We talk to its CEO, Howard Lerman, next. This is Bloomberg. Well, it was nearly 1 year ago that Yext went public with the usual first-day pop for a tech startup. It surged nearly 22% that day. But it's been a different story today. There was the stock tumbled by as much as 9% at one point. This comes as the company posted its fourth quarter numbers. Here to tell us more about the last year and the latest news is Yext CEO Howard Lerman. Howard, what's a company to do? Your revenue in the fourth quarter climbs more than 30%, and yet still the shareholders don't seem to be too impressed. Why do you think the sell-off?
Hi, Carolyn. Well, look, the stock today ended right about this time last week we were. So we think that investors continue to focus on the long term. The huge TAM, the total addressable market, more than $10 billion that we have in front of us, and the rise of AI-powered services like Siri, Google Assistant, and Alexa that provide our business in a new category with a massive tailwind. We feel great about the quarter. We feel great about our progress and where we're positioned for the upcoming year.
Do you feel great about the fact that your share price hasn't really budged from that $11 mark since the IPO? How do your shareholders feel about that?
Well, it's all about the long run. Digital knowledge management is a new category of software. We're not CRM in the cloud. We're not expense management in the cloud. We are witnessing, the world is, the rise of AI-powered services. When you look for things today, no longer do you get 10 blue links back on a page. You get structured direct answers. If you ask Siri where the nearest McDonald's is, Siri just tells you the answer directly. This is a profound shift in the way that consumers experience information, and it's a big deal for huge enterprises that make large investments in their websites. For 20 years, their website was the centerpiece of their digital experience. But today, at that exact moment of intent, they need to be found. And so this new category, it's an evangelical thing to build a new category. And we remain focused on the long run and our long-term opportunity.
So a new category to provide perfect information, businesses to be able to make sure their geolocation is correct, all that sort of thing, and you're building in the AI. Where is the opportunity, therefore, to keep on increasing your growth? At the moment, we're at about 30% year-on-year growth for revenue. Will that scale even more? Will we see a faster pace of growth as companies understand the opportunities within their data?
Well, in fiscal, our last year, we grew 37%. We continue to see a total green field in this $10 billion opportunity. We're going to grow by adding new logos. We added 230 new logos last year. We added 80 new logos last quarter. We also increased our deferred revenues to $89.5 million in the quarter. That's a 57% increase over the comparable period last year. We feel that there's incredible momentum in this category, not just from the intuitive shift for things like voice search, which now makes up 20% of all queries, but also the fact that when we look for things across Alexa or Siri or all these different devices, we get structured direct answers. We drove on our platform 1.45 billion driving direction requests to our customers last year. We drove 147 billion search impressions. The stats are staggering. The world is waking up to digital knowledge management, and we feel great not just about the quarter, we feel great about the upcoming year and the long-term trajectory of this macro trend, the rise of AI services.
So you're going into a company and you're pitching your wares. You're talking to me about artificial intelligence, the way you deploy it, talking about voice recognition. What actually are you selling companies at the moment, and how will that evolve?
Every one of these different services, whether it's Google Home or even Facebook, they all have 3 layers. They have their UI, that's how they engage with you in the world. They have their AI, that's their algorithms that decide which answers to give you. And then they have a knowledge layer. This is a knowledge graph that is like a brain-like database that contains all the facts they know about the world and how it's related. For a big company, say McDonald's, they've got to make sure that Google Assistant knows where all the McDonald's are, all the different calories in their menus, and all the different pieces of their knowledge graph in order for Google to give you an answer. That's where we come in. We help deliver amazing results. Arby's saw 11.6 million driving direction requests.
Howard Lehman, you break it all down for us. You told us your numbers and how we're going to see the company continue to evolve. CEO of Yext, come on and do it again with us sometime. We thank you for joining us. That does it for this edition of Bloomberg Technology. A reminder that we are live streaming on Twitter. Check us out at Technology, weekdays, 5 p.m. New York, 2 p.m. San Francisco, 10 p.m. in London. That's all for now. This is Bloomberg.